What up, what up, what up? It's your boy, the Options Boss, sliding up on y'all. Listen, guys, I hope all is good. Hope y'all being safe out there in these Wall Street streets. And we're going to get right into it. Your boy just passed 400 subscribers a few days ago, and I am on my march to 500 subscribers. And what that means for you is I am giving away one free share of tea to one of my subscribers to this channel. And the way that we do that is, if you're a subscriber, you comment down below and you say, I'm a subscriber and I want in. You comment on this video or any other video of mine and you say that, and I will enter you into a raffle. And when I hit 500 subscribers, I'm going to do a raffle with all those people. And whoever wins, if you comment down below on that video and claim your prize, we're going to work out a way for me to get you one free share of tea.
Oh, yeah.
Now, with that being said, if you're not a subscriber, definitely, it's not too late for you to get in. Subscribe to the channel. Click the notification bell, and when I drop these Get Money Jewels, you'll be getting it right off the press, and you can use these strategies and game plans to help you get money in the market, which is what we're here for. Now, that said, guys, we're going to hop right into it because I already know you're subscribed, and I know you're ready to get to this content. We're going to talk about two things today. We're going to talk about doing your due diligence on these stocks so we know what stocks to get in, why to get in, what we need to be looking for when doing our due diligence. And we're going to talk about one of the most common and overused terms in the stock market today. And that term is what? Buying the dip. Guys, yes, we need to buy the dip, but you need to understand exactly what the term buy the dip means. Me, guys, I love dip all the time, but you got to know when is the time for the dip. So what we're going to do is I'm going to go in a few charts today, guys. I'm going to show you examples of when is a good time to buy the dip and when is not a good time to buy the dip. And I'm going to show you why that. And I'm also going to explain to you guys due diligence. So I am going to get some dip. We're going to get over to some charts and we're going to do some work. I hope you guys are ready. So guys, we're getting into this chart action. And if you look at the top of the screen, you'll see we're in CCIV's chart. And if you look over here, you'll see I am going a month out right now for this video. So if you look at the very bottom of the screen, you will see that I am using a MACD. And I'm also using, if you look up top, the moving average, 10-day, 20-day, and volume. So these are the things that I'm going to be looking at when we're discussing buying a dip. Now going back to the very beginning of this chart, guys, and hopefully you'll see my mouse clicking over. So when I'm at the very beginning of this chart, this blue line is the 10-day average. And when I see that blue line underneath this orange line, I do not want to buy that right there. I am going to look at all that and not touch it. Now at the very bottom, you'll see a blue line and a red line. And what I'm looking for right here is I'm looking for this blue line to cross over top of that red line. And when that happens and this blue line right here crosses over that orange line, that is a great signal to buy. So right here, if we're looking, I see at right about this point back here, if we scroll back a bit, the blue line passes the red line on the bottom. But at the same time, we're still underneath the orange line on the top. So as I see us get ready to pass the orange line right here, now I see the blue line is past the orange and the blue line is past the red. This right here will be considered a buy signal. So if a stock were right here, you will buy that. And you can ride that a little bit depending on how long it lasts for. So as we see this last bar, this candle right here, if you see at the top where it says price, it closed at 30.56. So if we got in right here, and we rolled this all the way until the blue line get ready to cross back down, you would see not very much profit right there. So we would have got in that position, hypothetically speaking, buying a dip, and we would have got out, and it would not have been much of a good position for us. Then we go here. Now we're dipping. So when you see the dip again, 27.70 is closing. None of this right here would you want to buy, guys. Because if you buy these dips, the stock is still moving down. You don't want to buy the dip when the stock is moving down. And I'm going slow so you guys can see the price action at the top of the screen. You know, we're closing at 24.38 right there. We're closing at 21.45. I'm not buying none of these dips because the blue line, the moving 10-day average is still below the 20-day average. I'm not buying none of this. And the MACD, the blue line, is really close to the red line. There's no separation. None of this am I buying. So when you guys buying right here because it's dipping, you're going to lose more money. You're setting yourself up to lose more money.
Oh, no.
All this, the stock right here was at, 29. And then it goes to 24, 25. And then somebody says, oh, buy the dip. And when you buy the dip, guess what happens? It keeps dipping. And now you done lost another $3 a share. Now you done lost another $4 a share. Guys, you do not buy this dip. You wait, you be patient, you tolerate all of this. And then at the bottom of the screen, you'll see the blue line is starting to get a little teeny bit of space on the red line, not much. And up top, still no real progression of the blue, the 10-day average. So now as we go up further, we start to see the 10-day average getting a little separation, and we see down low it getting a little separation. And that separation for them both starts probably at about right here. And that's closing at 25.58 if you see that. So if we ride this 25.58 all the way up until neither one of the lines are crossing. Now, if you buy that dip right there, you go from 25.58 and you go to 28.66. So now you made money on buying that dip. That's how you buy a dip, guys. And if you go all the way over, because technically the blue line is still above the red. If you go all the way over, you could probably get it to 28.66. Then if you go down even further, now the blue line on top is starting to go back below the orange line. And now you're at 29.50 if you're not looking at the MACD at the bottom. So that's when you buy a dip. And then as we go down further, this dip right here, 27.36, if you see the price over here on the side of the screen at the top, you don't buy this dip, guys. And the reason why you don't buy this dip, again, is because it's still dipping. There's nothing in this stock that tells you it's going to stop dipping. So if you bought that dip at 27.66, now you done dipped it down to 22.77. No. And because the way we finished the day with the blue line still underneath the orange line, the 10-day underneath the 20, you never buy this dip. And if you avoid buying dips like this, you'll be better off. I'm going to show you guys another chart of another company that I know you guys love. Bingo. BNGO. So guys, if we look at this chart right here, we're going to start it off. Now, right here, the 10-day is getting ready to get close to the 20-day, but it doesn't pass it. So we're still dipping. Now you see the dip right here, we're at 970. If you buy this dip, guys, you lose money right here. You buy that dip at 970 and you get all the way down to 622. You lost so much money. None of this down here you want to buy. Now the next day, to start the day off, we have a big green bullish candle to start the day. All right, great.
Yeah.
So now what you're looking for, if you look at the bottom, you'll see the MACD respects that bullish candle and jumps up. Great. So now that the MACD did that, we're looking for the 10-day to pass the 20-day at the top. So when the 10-day passes the 20-day, right here, this one, you see you're passing it at 798. And the MACD is respected the move from the first bullish candle, and the MACD is above. So now you ride this 798, guys, and you ride this all the way. All this is above. All this is still bullish. Close right here, but bullish. Now right here, now we're no longer really super bullish. So at this point, we're not bullish because you see the MACD cross under. So now you done rolled that up from, what was that? 622, and you rolled that all the way up to 967. Now you done made $3.50 almost a share. So you make that trade right there. That's a good trade. Now again, guys, here we go. We start dipping. Now when we dip, you're at 873. you don't want to buy none of this, because when you buy any of this, the stock has not made a move to tell you it's going to do something different. You see a very small move here, but it's very small. So if you buy any of this, then you're going to run into this end where you see at the end, everything falls off. And if you look at it here, 868, and it just keeps going down. 790, 780, 784, 753, 757, 743. It just falls off. And that's because there was not a dip right here for you to buy. So if you bought that dip, you're costing yourself money. You don't buy dips like that, guys. We're going to do it again with another stock I know you guys love, Golden Nugget. So Golden Nugget right here. If we look, guys, this is not a bullish move. So we're trading at $14 a share, all right? Now right here, the 10-day gets ready to pass the 20-day. And at the same time, the MACD has already respected the move. So now you're getting bullish. You're getting bullish at $14.52 a share. Great. Let's start moving. All this is above. And if you take it all the way over, you get out at, what's that? $14.57 closing. So not a big move, but nevertheless, it was a move. Now here you go. This dips $13.25. You don't buy this dip because the stock is still going down. $12.81, $12.67. You just lost another $1.14 right here if you bought this dip. Now right here, where the 10-day passes the 20 and the MACD on the bottom is respecting the move, now you want to buy that dip. Now when you buy this dip at $13.56, guess what happens? Everything is respecting it. The 10-day is above the 20. The MACD is respecting the move. And you get all the way over here, $18.93. That's a nice move. And right here, you're still bullish. So if you take it all the way to the end of the bullishness, all right, so you're going basically to here, $16.84. Now you done made yourself, $3 or some change a share. If you got 100 shares, that's $300. If you got, 1,000 shares, you made $3,000. And that's because you're looking at that 10-day average and deciding when to make a move. And down here, you don't buy this dip. So again, this dip right here is not a buyable dip because the stock has not made a move the opposite way to say, hey, let's buy this. So it's not a move you want to do. Now, guys, at the same time, this is a stock I like, FSR, Fisker. So Fisker, I'm in already way before this. So I'm enjoying all of this. Now, I see this happen right here, and it's dipping. I would like to add to my position, but I don't add right here because I know Fisker is in a downtrend. So Fisker makes a little up move. All right, but it's not a big move, so I don't add right here. Then right here, Fisker is dipping. $22, $21, $20. All of this I could buy right here, but I'm not buying because I know this dip is not a dip for me to buy. So I'm just looking at this happening to Fisker right now. And I'm not buying none of this. 19, 18, not buying none of this. And if I did buy, I would have cost myself $3, $4, $5 a share. So I did not buy the dip yet because Fisker is not making a move to tell me I need to buy this dip. When this blue line, when the 10-day goes past the 20-day and the MACD is respecting the movement of the stock, that's when I know to buy. So that's what I mean, guys, by every dip is not a dip to buy. When you buy Apple on a dip is one thing because it's Apple. It's an established entity. It's a big-time company, and we know Apple is going to make us money. But when you buy into smaller companies, you have to be careful because of the volatility. You have to understand when to buy the dip, and that's what I want you guys to understand. And in regard to doing your due diligence, guys, if you're trading long-term, you want to look into these stocks, and you want to understand, does this stock have good ownership structure? Are they profitable? Will they be profitable in the next 5 years? Is there strong competition coming on? What's the outlook of the company? These are all things you need to understand when you're buying long term. When you're trading options, you want to look for a short-term catalyst. You want to look for a chart that's bullish. Charts like this is not a bullish chart at all. There's nothing bullish about this chart. There's no strong movements either way. There's not any reason to trade an option on this chart. But you want to look for strong movements on the charts. You want to look for great volume. I didn't even touch on the volume. The volume's at the bottom. There's almost nobody buying and selling Fisker right now. So this is not a stock that you want to trade an option on in the short term. These are things you have to consider before you make a move. Also, if you're swing trading, you want to look for a catalyst that could be coming up in the next few weeks or a month, and you want to get in, and you want to also consider the state of the market overall. Because if the market is doing great, then, stocks move up. If the market is not doing great, then stocks, even with a catalyst, sometimes will pull back. And with that, I give the example of Microsoft. They had great news come out that they're looking to buy Discord, which will be a great move for Microsoft. But because the market is not bullish right now, Microsoft went up a little bit yesterday. I day traded it. I got out, and it fell back today to where as though it never moved from the news. And that's why you want to make sure the overall health of the market is good when you're swing trading and when you're buying calls. Because even with a catalyst, if the market's health is not good, it'll kill you. It'll kill your trade before it's ever started. And that's something you guys need to consider. So I hope you guys enjoyed that. I hope you understand a little bit better when to buy the dip and, when to just avoid that particular dip. I hope you guys understand what it takes to do your due diligence on a company, whether you're long trading, option trading, or swing trading. And if you do, definitely drop a comment and let me know that you appreciate it. You gained something from the video. That's my hope, is that you guys did. Also, don't forget the 500 subscriber challenge, the raffle that I got going on. And make sure you subscribe to the channel and hit the notification bell so when I drop these jewels, you can get it right off the press. You can always be a boss with the Options Boss. Guys, I'm a holla when I holla.